Let's bring in E.J. Antoni, Heritage Foundation Chief Economist, and Marc Sumerlin, Even Flow Macro Managing Partner. Gentlemen, great to see you. Thank you for being here. E.J., our friend and associate Steve Moore had a mea culpa today. He said, at first he was against firing Jay Powell, and he spoke out strongly against, he was against the president, suggesting that. Now he looks at Powell's record, particularly on growth. As we've just found out, it was way off. I think we can put up the figures. The Fed was estimated, of course, that was Powell and those genius 300 economists that they have who always get it wrong. They said it was going to be 1.6%, the Fed's September forecast. That was their forecast for growth of the GDP. Actually, in the second quarter, it was 3.8. Last week, we found out that the third quarter rate was 4.3. They were so off. Should he be fired for this?
Well, look, David, it's not just that, though. I mean, this is a man who has been making mistakes since the first Trump administration when he first became Fed chair. We forget because it happened right before COVID, but he over-tightened so much that money markets flipped out. We had a repo crisis, a kind of mini financial crisis, and the Fed ended up having to conduct a $500 billion bailout of leveraged hedge funds beginning in the autumn of 2019. Now, again, it happened right before COVID, so we all forget about it, given everything the Fed did as soon as COVID started. But then throughout COVID into 21 and even 22, the Fed kept its foot on the gas for way too long, gave us the 40-year high inflation. Then they had to hike rates very fast at the fastest rate in 40 years. And so they've completely frozen over the housing market. They gave us a regional banking crisis. They gave us the incredibly high cost of living that we have today. I mean, Powell's entire record, I think, is just mistake after mistake.
Well, you're making the case. Do you think he should be fired for all that?
Well, if for cause includes incompetence, then I think the case is very clear for removing Powell. It's just a question, I suppose, of how broad is that?
Marc, the bottom line here is that Powell and those 300 economists just don't seem to get incentives. How incentives affect the economy, the incentives that the disincentives from the Biden administration, how they affected the economy negatively, particularly on inflation, and then the incentives of the Trump era, they totally misinterpreted the effect of those incentives on the economy, the tax cuts and the regulation cuts.
Yeah, I mean, Powell's big mistake was in 2021 when they just missed that the spending was going to cause inflation. So I think if you want to hit them on something, that's probably it. And ironically, that's part of what made the building more expensive. Yeah, the cost of everything went up 25% after COVID, and that fed through to the cost of their own construction. So they got burned a little bit by their being too late in 2021. I do want to give Powell credit for one thing. I mean, the minutes that came out today showed that 8 people didn't want to vote for the rate cut that we had 2 weeks ago, and Powell had to twist some arms to get there. So they might be a little slow sometimes, but they have been on a better track the last 3 meetings.
Yeah. Was the Bank of America president right that if he was fired before he goes in May, I think it is, if he was fired, the bond market would just collapse as a result of lack of confidence in our dollar?
I don't think it would collapse, but it wouldn't do any good. I mean, there's no reason at this point. It is even President Trump said that it's a short enough time that it's better to focus on getting the right person in next. And thinking about the committee and the reforms you want about the committee, because we some of the blame that falls on Powell is the fact that you've got a Fed that is just an old creaky institution that needs to be reformed, and it's too slow. It's as slow as molasses. I mean, and it just needs to be sped up in a lot of different ways. And so I think of it a lot more of an institutional reform than trying to blame him.
Well, let's talk about something that's fast and exciting rather than something that's slow and boring. And that is the tax cuts that are coming, EJ. And Treasury Secretary Bessent was talking about them. I think we have that soundbite. Can you roll that?
I can see that we're going to have a gigantic refund year in the first quarter because working Americans did not change their withholding. So I think households could see, depending on the number of workers, $1,000, $2,000 refunds.
And EJ, in addition to that, people who have 401k, and that's millions and millions of people who have a 401k, as you've pointed out in a great paper that you wrote for the Committee to Unleash Prosperity, They have had an extraordinary growth in the past year under Trump that is the exact opposite of what happened under Biden. Quickly explain.
Well, David, that's exactly right. Under Biden, we had literally the worst 4-year run for the bond market in at least a century that really clobbered 401ks. People forget it's not just the S&P in your 401k. It's disproportionately fixed income, especially as you get closer to retirement. You really pile into those fixed income assets. They got clobbered under Biden. So in inflation adjusted terms or in real terms, you saw losses of almost $25,000 to the average 401k under Biden. Conversely, this year under Trump, from the first quarter through the third quarter, it's moved in exactly the opposite direction. In fact, you've regained most of that lost ground with almost a $21,000 increase in the real value of the average 401k. So great news on that front for America's retirees. We now have, if you look at pension plans, it's not just 401ks, David, but pension plan balances are now over $10 trillion for the first time.
And Marc, very quickly, because we're running out of time, but the effect on the business community at large, both the big companies and the small and mid-sized companies, are they equally optimistic about the next year?
I think so, because of the tax bill that you're talking about. I mean, by my numbers, we have $140 billion hitting in the first 4 months of the year. And that's just on the individual side. And so people are going to get those refunds, and businesses are going to be able to deduct all their new construction costs. Even the Fed raised their growth rate for the next 3 years based on the minutes that came out.
Good stuff. So it should be an exciting year. EJ, Marc, thank you so much.